Are you ready to become a better investor? This is Andrew Stotz of A. Stotz Investment Research, and I'm going to show you how to use our Global Equity FVMR Snapshot, what I like to call the world markets in your hand every week. This product is a weekly update on the world markets, including developed and emerging markets, as well as major regions and countries. It's a one-page document that covers the way we invest, which is fundamentals, valuation, momentum, and risk, or what we call FVMR. Get it in your inbox every Monday. Carry it, print it, put it on the wall, use it, take it to a meeting. You'll always be up to speed on the global equity markets. Now, how do we invest? We call it our 4 elements FVMR. So if we look at this diagram, we split it across down the middle, and what you can see is the upper section, we look at earnings. At the bottom section, we look at price. We believe that management is responsible for the earnings, and investors are the people who drive the prices. So now let's put it into this framework. Our first element is fundamentals, because we think that profitability shows whether a company's managed well. And of course, in investing, we would prefer high or rising profitability. Now, the next element is valuation. Now, this is on the bottom of the diagram because it's related to price and it's driven by investors. In fact, management probably shouldn't worry too much about the valuation. When we look at investing, we want to look for companies that have good fundamentals at a low price. But of course, we know it's rare to find that combination. So we want to look at both of them in tandem. The third measure is momentum, where we try to avoid value traps, but also are looking for positive momentum. Now you can see that momentum appears on the upper part of this diagram, meaning earnings momentum, and on the bottom, meaning price momentum. We look at both. Finally, we have risk. And again, risk is about earnings and risk is about price. So we accept the fact that some investments are just going to be solid and stable, and that would mean low risk. They may not be the cheapest. They may not even have the best fundamentals or momentum, but sometimes a low risk investment can be very attractive. So now let's put it into context of this snapshot. Here we have the way we're going to look at this snapshot. First, we're going to have 4 columns. The first is fundamentals, then valuation, then momentum, then risk. So now let's look at the first section, which is fundamentals. What you're going to see here is 2 major fundamentals that we look at, which is ROE and dividend payout ratio. What we can see at this is, for instance, the world ROE right now is at 12.3%. Where is the lowest ROE? In Japan. If we want to look at dividend payout ratio, we can see that developed non-US countries are producing a dividend payout ratio of 51.2%. And that's compared to, for instance, the world dividend payout ratio of 42.6. Now let's move on to valuation. This is PE and price to book. So for PE, we can see, for instance, that emerging markets are trading on 11.3 times, whereas North America, mainly the US, is trading on 16.2. If we look at price to book, we can see that Asia is trading at just slightly over book value compared to the US, which is now trading at 2.3 times price to book. We can see a valuation gap there. It's a question of when does that gap close? Eventually it will. Either the US will come down or the Asia will come up. Now let's look at the next measure, which is momentum. Now we look at both earnings momentum and price momentum. Earnings momentum, we're looking at 2015 and expectations for 2016, which is coming from consensus. Then we look at price short-term, 1 week, and price long-term, 1 year performance. We can see here that the world EPS growth in 2015 was slightly under 0 at 0.7. And we can see, for instance, that the fastest growing area in 2016 that's expected in 2016 is 27% in Latin America. Then we can see, as far as price is concerned, we can see that the 1 year price performance of Asia has been crushing 16% down. And we can see that the smallest amount of down has been Japan, who's outperformed during that time. Finally, let's look at risk. We look at gearing or balance sheet risk, and then we look at price risk. This is the standard deviation or the volatility of that particular market or region. So we can see, for instance, that the prior 12-month, that's the PTM up there, prior 12-month gearing in Asia was 24.7%, meaning Asia is not highly geared compared to the rest of the world. Then we can see, for instance, that the volatility over the last month has been quite high for the world at 20.5 versus 1 year at 13.9. You ever heard people on CNBC and Bloomberg say, oh, there's a lot of volatility these days? Well, that's what they're talking about. So we can also see that in Asia, we have the least amount of volatility right now, and that is at 14.7%. Now, finally, you can see at the top, the world volatility is 13.9. When you combine all markets in the world and all stocks, your volatility is naturally going to come down. So when you're comparing volatility, you want to look at similar regions or countries. So to review what you will get from this product is you'll get a weekly update on the world covering developed and emerging markets and major regions. You're going to understand the fundamentals, valuation, momentum, and risk the way we look at it. You're going to get it in your email box every Monday. And you'll always be up to speed on global equity. How do you get it? You go to this website, babinow.com/join, and I will see you there.